Great quarter, bad stock day. On Earnings Unscripted, it's April 21st, 2026. And yeah, we're looking at RTX, ticker RTX. And this first quarter was stronger than the tape wanted to admit. They put up $22.1 billion in sales, $1.78 of adjusted EPS, about $3 billion of adjusted operating profit, segment margin at 12.6%, better than a year ago, and backlog at a record $271 billion. Jet engines, avionics, missiles, all of it moving. So, Miro, why the cold shoulder?
Because this stock only gets rewarded for perfection. We don't have a clean standalone Q4 income compare or the exact street line in front of us, but year on year it's obviously strong. Sales up 9%, EPS up 21%, free cash flow up 65%. Pre-market, it tagged $203, then reversed into the call and finished down 3.6%, near $187. That's not bad earnings. That's a high multiple meeting a merely excellent print.
So investors basically said, nice industrial execution, not magical enough. And very briefly, just personal opinions here, not financial advice, so please don't trade a defense giant purely on our charm.
Right, and the execution really was good. Raytheon had sales up 10% and profit up 25%, with management calling it 12 straight quarters of material growth. Pratt's repair shops were the other big deal. PW1100 MRO output up 23%, aircraft on ground down about 15% from end year. If you've been stranded at an airport because an A320 isn't ready, that's the everyday version of this quarter.
Yeah, that is such a perfect RTX image, somewhere between national security and, sorry, Gate B14. And they even had that Singapore robot story, right?
They did. Robots assembling compressor rotors with 100% first pass yield, which sounds sci-fi until you realize it's just throughput. More broadly, RTX grew organic sales 10% and segment profit 14%, with only a 1% increase in headcount. That's elite operating leverage in a hard manufacturing business. Collins and Pratt still took tariff hits, margins rose anyway, and they paid down $500 million of debt.
Okay, so the machine finally looks less clogged. But what do you think the market is underappreciating here?
Two things, maybe. First, there's a possible $500 million tariff refund after the Supreme Court knocked out the IEEPA tariffs, and management says that upside isn't in guidance. Second, RTX signed 5 big framework agreements with the Department of Defense around munitions. Sounds dull. Actually isn't. If those stick, they change how capacity gets funded for years. And management still raised the full-year sales range to $92.5 billion to $93.5 billion and EPS to $6.70 to $6.90 while keeping free cash flow steady.
Right. So strong quarter, skeptical stock, and underneath it, maybe a bigger shift in how RTX actually scales. All right, let's get into the details.
Yeah, and the detail I'd sit on is those 5 framework agreements. That is not just, nice order language. In defense, year-to-year buying is poison for capacity planning. You cannot tell a motor supplier or an energetics plant to build a new line because Washington feels urgent for one budget cycle.
Right, because missiles are not software seats. You can't just, spin up more AMRAAMs by Tuesday.
Exactly, and Kallio said it pretty plainly. Quote, once finalized, these agreements would provide firm demand signals for RTX and our suppliers to invest in ramp-up production well above existing rates over the next decade. That phrase, firm demand signals, is the whole story. It means the customer is finally admitting that the industrial base needs certainty before it spends.
Which sounds obvious, but apparently the Pentagon had to learn supply chain reality the hard way.
Yes, late but useful. And the hidden angle is cash flow. Normally, if the company says, we're going to ramp missile capacity hard, you immediately think, okay, free cash flow gets hit, CapEx goes up, working capital swells, everybody claps on the top line and then winces at the cash. Here, management is describing a more collaborative funding approach. That's dry language, but it suggests the government may help shoulder some of the upfront expansion burden.
So the old model is, please build a factory first and we'll maybe order later, and the new model is, fine, here's an actual signal, now go build.
More or less, yes. And RTX needs that because the constraint is not only inside RTX. They've already talked about roughly $900 million spent in places like Huntsville and Andover, but the real fragility is down the chain. Tier 3, Tier 4, the weird specialty stuff, electronics, chemicals, propulsion inputs. Kallio also said material receipts were up 13% year over year here in Q1. We're going to obviously keep a very close eye on it. That is management saying supply is improving, but nobody in this industry is relaxing.
Yeah, that line jumped out at me. Keep a very close eye on it is executive for please nobody break.
Correct. And I think this also explains something people found annoying in the guide. They raised sales, they raised EPS, but they left free cash flow alone. I can't prove that's entirely because of the defense ramp, let me be careful, but when the profit outlook goes up and the cash outlook stays flat, it usually means management sees investment needs coming.
Okay, that's interesting because at first glance that looks conservative, maybe even stingy, but you're saying it may actually be them telegraphing, no, the machine still needs feeding.
Yes, not weaker business, just heavier plumbing. And honestly, I prefer that to them pretending every extra dollar of profit instantly becomes cash in a business that builds engines and missiles. That would be a little too elegant.
Fine, fair. But then we get this bizarre second layer, which is the tariff refund thing, because that almost sounds fake when you say it out loud.
It does sound fake, but it's right there on the call. Kallio said we paid about $500 million associated with that kind of tariff. Obviously, the government is in the process of starting the refund process. So yes, there is a real possibility RTX gets roughly $500 million back. And management was pretty clear that this is not in the guidance.
Which is such a strange earnings sentence. Also, the Supreme Court may hand us a giant refund check. That's not in the standard industrial playbook.
No, and I'd be careful not to treat it like free perpetual upside. The IEEPA tariffs were overturned, but they were then replaced with Section 122 and 233 tariffs. So this does not mean tariffs vanish and angels sing. It means RTX may recover money already paid while still dealing with a changed tariff regime going forward.
So it's not a miracle. It's more like getting reimbursed for the old pain while the new headache is already on the calendar.
That's exactly it. And it matters because Collins and Pratt were already taking tariff headwinds. Management talked about 50 to 130 basis points of impact and still expanded margins anyway. Lower interest helped. The tax line helped, sure. But if this refund shows up, that is a meaningful cash cushion in a quarter where cash was down sequentially and they also paid down debt.
Which makes the market reaction feel a bit impatient, honestly. Like you've got structural defense demand improving, a possible cash windfall not in guide, and people still went, not dazzled.
Well, the market is grading on a very high curve here. Optionality is nice, but investors still want proof that RTX can convert all this demand into reliable output without getting snagged by suppliers or by the commercial side doing something annoying again. That's why I think the framework agreements matter more than the refund. The refund is a boost. The agreements are an operating system change.
Ooh, that's good. The refund is a boost. The agreements are an operating system change. Very you.
I try. And there was one more clue in the call, actually. The company kept talking about changing the economics of what it sells, not just the quantity. That non-kinetic Coyote example, the drone that can go out, do the mission, come back, recharge, and go again, that tells you customers are thinking hard about cost asymmetry now. Not just can you make more interceptors, but can you make the math less stupid?
Which is a very 2026 sentence. Not just bigger arsenals, better economics per engagement.
Right. So the deeper read on this quarter is not merely RTX had a strong 3 months. It's that both halves of the company are trying to turn old pain points into systems advantages. Defense wants long-duration funding logic. Pratt wants the repair crisis to become a throughput engine. If they pull both off, the stock wobble looks short-term. If they don't, then the skepticism was early, not wrong.
So that's really the question heading into next quarter, isn't it? Not whether demand exists, but whether RTX can turn demand, reimbursement, and all this new procurement logic into clean execution.
Yeah. And we don't really have a neat Q2 guide, so the best signal is the full year raise. Kallio said, given our first quarter performance and the strength we're seeing in our defense business, we're raising our full year outlook for adjusted sales and EPS and maintaining our free cash flow outlook. That's confidence, but not victory laps.
Right, like they trust the demand. They do not fully trust every moving part yet.
Exactly. Sales now $92.5 billion to $93.5 billion, EPS $6.70 to $6.90, and free cash flow still $8.25 billion to $8.75 billion. So the message is we can see the revenue, just give us a little more time on the cash conversion.
Which is actually pretty believable. Not glamorous, but believable.
I think so, and Pratt is still the emotional swing factor. Mitchell said, out-of-warranty flight hours continue to grow. Boring sentence, very good economics. If they keep shrinking AOGs and moving more engines through the shops, that old crisis starts to look more like an aftermarket annuity.
That is such an RTX sentence. Fix the disaster, then invoice it for years.
Yeah, industrial alchemy, yes. The risk, though, or really the test, is whether those quieter issues on the commercial side keep eating capacity.
And Raytheon feels almost simpler. The demand is there, Washington finally sounds serious, but if the lower-tier suppliers wobble, the market will punish the stock before management finishes the sentence.
That's the setup. Also, the tariff refund would be nice, sure, but it's a bonus, not the base case.
Yes. Don't build your thesis on a potential government reimbursement check. That is not a grown-up hobby.
Fair. So, for me, RTX is moving from prove the story to prove the throughput. That is a better place to be.
And maybe that's the whole quarter in one line. Less narrative risk, more factory risk.
Which, honestly, is progress.
All right. Enough missiles and turbine surgery for one day. Thanks for hanging with us, everyone.
See you next time.
If you want these earnings chats to just show up when they land, following the show is probably the easiest move. And just so it's clear, this one was put together with AI from the company's filings and the earnings call transcript. So if there's a ticker you want us to cover or something we should sharpen, email earningsunscripted@datamadness.ca. And there's an X link in the show notes. Take care.
Talk soon.